We're going to go ahead and get started. If you could grab your seats. And once again, we apologize for the short break over lunch. Just so our speakers know, the crowd will grow immensely once we empty out the networking lounge and the lunchroom. So welcome back. PPF was delighted to help support the group of the expert panel on sustainable finance in terms of some of their consultations and engagements. And today we're delighted to have some of the members of the expert panel for discussion with us. I'd like to introduce Tiff Macklem. Tiff is the chair of the expert panel on sustainable finance, dean of the Rotman School of Management at the U of T. He previously served as senior deputy governor of the Bank of Canada. Kim Thomassin is a PPF board member. She's also executive vice president of legal affairs and secretariat at la Caisse de dépôt de placement de Québec. Andrew Chisholm is a member of the board of directors of RBC. Prior to that, he spent most of his career at Goldman Sachs. And I'm delighted to welcome Satyamoorthy Kabilan, who is the VP policy at PPF. Before joining PPF, he was director for national security and public safety at the Conference Board of Canada. Please welcome our panel.
Well, good afternoon, everyone. When the words sustainability and growth are mentioned to you, what goes through your mind? Is it two planets kind of drifting away from each other, or two opposite poles completely repulsed? Or is it actually a superimposable picture between sustainability and growth, that one supports the other and one builds upon the other? I think this is one of the challenges that we face whenever we have the discussions around sustainability and growth. Where do they sit? Are they mutually exclusive, or do they reinforce one another? And that's a topic that we're going to tackle today with our three esteemed panelists. And the idea here is I'm going to throw a couple of questions at our panelists, and we're going to try and explore how the concept of sustainability is affecting business decisions, how is that changing our outlook, and what might be some of the potential opportunities for growth for Canada as we look at sustainability. So with that, I'm going to throw open my first question, which is really how the concept of sustainability has affected business decisions on investment and growth. And Tiff, if we could start with you.
Well, thanks. If it's such a big question. If you can't answer the whole question, the trick is to narrow it a bit. Andy, Kim, and I, together with Barb's Van, have been on a panel convened by Minister McKenna and Minister Morneau to look at the role of the financial system in financing sustainability. It's called the Expert Panel on Sustainable Finance. So let me narrow it a little bit to that topic. And I think it's important to stress at the beginning, look, finance is not going to solve climate change. But where finance come in is that there are huge investments that need to happen to enable the economy's pivot to more sustainable growth. And so when we started to look at this, the first question, well, what is sustainable finance? And the first thing we discovered is there is no definition, so we made one up. And the way we see it is we define it pretty broadly, and it really has three things. First is investment, which you can think of as lending, funding. Second is risk management. You can think of that as insurance and risk identification and risk assessment. And then third are a number of financial processes, disclosure, valuation, for example. And together, those promote more sustainable growth and promote a stable financial system. As I said, finance is not going to solve climate change, but it has a huge role in channeling the investments and helping households and companies insure themselves against new climate risks.
So that's an interesting start to the discussion, particularly in terms of insuring yourself against new risks. And when I think about this as a growth and business opportunity, isn't it within the purview of business to minimize their risk and to enable longer-term growth? Is that part and parcel of how we should be viewing sustainability as an investment, as that risk deferral or as that risk mitigation, as part and parcel of it?
Well, I'm going to let Kim jump in here on a bit what we heard, but let me just say, you can think of climate change, there's two big parts to it. One is the reality is even under the best scenarios, we are going to see more severe weather. We're going to see increasing impacts of climate on virtually every industry. And the most tangible aspect of that, which we're already experiencing, are the physical risks. If you talk to a P&C insurance company, they have seen a huge increase in their claims, mostly from flooding due to more intense thunderstorms, but forest fires, unfortunately, we've seen increased prevalence. Those are having very immediate effects on real people, real businesses, and the insurance industry that insures them. But Kim, why don't you tell them a little bit about, as we talked across to experts across the financial system, what we heard from them?
So we heard that, yes, Kabi, you're right, it is risk management, but it's also identifying the opportunities, getting the right data, getting the right information, putting in place the right opportunities for people to seize these opportunities. It's also about, for at least the asset managers, to see the long-term effect and thinking long-term, and sustainability and long-term goes hand in hand. It's not opposing. I like how you've presented it to get us to discuss, but we see for long-term sustainability being key, being instrumental to get us there.
And that's very interesting that you bring up the long term. And the last two discussions we had, the long term was brought up. Whether we're thinking about Canada's competitiveness and the intangibles economy, or whether we're thinking about how we deal with the future of work, that term kept coming up. So it is interesting to see now we've got a number of pillars aligned, including sustainability, that all depend on us looking at that long term. Andy, what are your thoughts on this?
Well, I'm going to be perhaps too much of a realist and kind of say sustainable finance and some elaborate evaluation of what is sustainable finance, it should really just be finance. We need to get to the point that there's not sustainable finance that is some sort of adjunct or hybrid of, it's just finance. And it means much better decisions with regard to assessing the risk and reward over an appropriate time frame and allocating capital consistent with that, and not being cynical about the notion of, yeah, but I can get away with it for 2 or 3 years and get decent returns, as opposed to just fundamentally working these things into the reflex actions that the financial sector takes every day in a myriad of different manners that creates the financial system as a whole. And so it's really essential that some of these reflexes, which are not there currently, and people have grown up over decades in their career to ever higher positions, not having to learn this stuff. And as a result, they get into the decision-making positions, and as a result, everybody working for them is operating on this manner. And we need, bit by bit, in a systemic fashion, to pull a number of different levers so that things work differently.
I think that argument about this needing to be, especially when we talk about sustainable finance, really, it's about, I agree with you, it's about dropping that sustainable piece. It is good finance, good financial management. I would actually argue with what we've got in the title, we could just drop it to economic growth. Because for that to make sense in the long term, all of these issues would need to come into play. But all three of you mentioned the long-term piece in this, in terms of getting people to look beyond that immediate. Do you have any thoughts as to how we might actually move that lever forward? And Andy, you mentioned, it's not about someone just showing up and going, well, I can get away with this, and I don't really need to be concerned about 10 years down the line. Any thoughts there, how we might actually change that or pull a lever to start changing that thinking?
Well, maybe I'll start. So in October, we put out our interim report as a panel. We are currently working very hard on finalizing our recommendations, and you should see those sometime in May. Could spill into early June, but we're certainly aiming for late May. And So let me give you a little bit of a preview about some of the things I think you will see in the final report. One of the things that we emphasize in the interim report is that if you want to, given the huge scale of the investments that need to happen to move us to lower carbon growth, we have to engage mainstream capital markets in this. And as Andy says, so it's not about sustainable finance being a niche in finance, it's about making finance sustainable. It should just be finance. And there are some key things you need to make and scale a market. You're going to need greater policy clarity. And we heard that loud and clear in all our consultations. Secondly, you need legal clarity, particularly around fiduciary duty. There is some confusion around is taking into account environmental and social factors a distraction from your fiduciary duty, or is it core to your fiduciary duty? We think it's core to your fiduciary duty over a reasonable horizon. There needs to be better information and disclosure. There needs to be greater clarity about regulations. And then there needs to be a more supportive ecosystem of professional services, accountants, lawyers that are trained in these issues and can support large companies that are pivoting to reduce their carbon footprint. And our view is, there will be recommendations in our final report about each of these elements. And if you don't get these right, you can add on some extra things, but you probably will not be able to successfully scale the market. If you want to get capital, mainstream capital markets engaged in this, you've got to build a scaled market. And those are some of the things that a scaled market will require.
Absolutely. You've brought up now engaging, if you like, mainstream markets, and we talked and Kim started the discussion on opportunity. And certainly if there's opportunity, that's what should attract mainstream markets. So from a Canadian perspective, what are the opportunities on offer in terms of sustainable, well, let's call it finance, in terms of that longer term view of finance? What are the opportunities on offer, particularly for Canada, and what could we use to engage that mainstream finance and to actually help drive growth for us?
The reality is the opportunity is massive, because when you think about it, you just take a step back and you say, our economic underpinning is so carbon intensive, industry by industry. We are resource dependent. You think of oil and gas, you think of minerals, you think of agriculture, you think of transportation, you think of real estate, on and on and on, carbon, 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 carbon. And as a result of that, combined with the fact that the world is deciding they want less carbon, we've got a bit of a challenge. And that means that every single sector needs to think about, and we all as a country, I think as a national endeavor, should find ways to support those industries and those leaders in a transition to something that is going to work over the long term. And in order to do that, that's going to require a huge amount of innovation. By the way, innovation that not just will go towards helping each of those individual industry sectors and the key players in those sectors to adjust, but also to then go and export those capabilities internationally and increase the size of the pie for Canada. This is a huge opportunity, while others are dithering, for us to figure out how to harness innovation, turn on its head this constraint of our carbon intensity, turn it completely on its head and say, let's treat it as a challenge. How do we turn it into an advantage? And the advantage is innovating better and faster than others and then utilizing those skills as competitive advantage internationally. Beyond that, there's going to be a huge aspect of adjustment to climate change. The latest information that just came out from the government study says we're already in Canada at 1.7 degrees. Paris says you got to keep it between 1.5 and 2. Guess what? We're at 1.7 and it's not reversible. And the Arctic is more than that. And so if Paris keeps, if we are all able to keep to the Paris construct, 1.5 degrees to 2 degrees globally, we should be expecting that we're in the threes. And the north of Canada is some multiple of that. And if that occurs, I'm not a physical scientist, I'm not a scientist at all. But if that occurs, there's a whole bunch of things that are going to happen to our infrastructure, to our supply chains, to our hospitals and our infrastructure. And through that, we need to build a massive amount of resilience and adaptation so that our systems function in the context of those extreme storms, the flooding, the wind, the heat, and the other disturbances that are going to occur from this. In adapting to that, it means there's a massive amount of infrastructure that has to be rethought. Huge opportunity, a lot of investment that can be made by the private sector, perhaps supported by, through blended finance techniques, government actions. And those are just several concepts. There are many more. Retrofitting inefficient buildings, on and on and on. I think the opportunities are massive, and we need to, in fact, change the narrative so that it's focused on opportunity as opposed to the sky's falling.
That's a great way to frame it. And Kim, you were the one who originally brought up that term opportunity and what we're facing. What other opportunities do you see to move the dial forward in terms of potential for growth in Canada? I think there's some great examples from Andy.
I think we see opportunities in low carbon. We see opportunities in renewable technologies, innovation, as Andy mentioned. I think what we needed to do, if I look at what we've done internally, was change our mindset and adapt our mindset to focus on the opportunities, have access to better data, to reliable data that we can share, and then it's adapting our processes to make sure that we capture these opportunities. If I look at what we've done in terms of our own internal climate change investment policy, it was those process, mindset, and data, which allowed it. And it's some incentives, because we aligned our compensation to get to reaching those results. So that often has a good impact on results when we align the compensation of folks.
Fantastic. And Tiff, do you have anything else to add to that overall bucket of opportunity for Canada?
Well, I'll just build a little bit on what Kim and Andy were saying. I think one of the things that, one of the real dangers for Canada is that a lot of the global discussion is very binary. In many ways, Europe is leading, particularly around sustainable finance, what is green finance. And by binary, I mean, there's two buckets. There's green and there's dirty. And the reality is Europe doesn't have a big oil and gas or resource sector, and so it's very simple. Canada, actually, like many other countries, has a very important resource sector. That is a key to our success. But if we want to maintain that, it's going to be important that that sector gets out in front in both reducing cost and reducing carbon footprint. You are seeing capital leaving the oil sands industry in Canada right now. That investor base is shrinking. Our role, really from a financial side, is what are the financial instruments that could help big resource industries make that transition? So, one of the things we've been thinking about, for example, as a complement to the green bond market, something called green transition bonds or green transition loans. So these would be loans that could go to a large emitting industry, oil and gas, for example, where embedded, they've made a commitment to reduce their carbon footprint by a material number. And if they achieve that, they get a better interest rate on their loan. And if they don't, they face a penalty. So what you want is you don't want financial markets to take a very binary view of the world. You want to encourage companies to do the right thing. And it's not so much about green or dirty, it's about reducing your carbon footprint and adapting to climate change. And so you want to design financial instruments that reward those things and facilitate that kind of adjustment. Because if we don't manage to do that in Canada, there's a real risk we really just go over a cliff and we face a very disruptive, very unpleasant adjustment.
Well, I think that's a really great point. And Dawn Farrell from TransAlta this morning was talking more about the transition in terms of her people, and as Alberta has moved away from coal and asking that. But it's aligning. We can't just say switch off and we're done. We have to find ways to transition, and maybe part of that provides us with the opportunity to build on that advantage and hopefully encourage organizations to move in the direction of sustainability. I think for me, if I had to sum up this discussion in terms of how we've looked at things, I would pull out a couple of key pieces. I think we've touched on the long term in terms of looking out beyond where we normally set our sights. I think that's probably going to be one of those really big challenges. I think the second big thing is opportunity, opportunity, opportunity. Each and every time, whether it's mitigating risk, whether it's new markets for us to explore, it's there. But I think the last one is what we started with right at the beginning. This is not about sustainable finance. This is about finance. So, ladies and gentlemen, we're just about at the very end of our time. I wanted to thank our three panelists for a fascinating tour and for opening up the conversation about finance rather than just sustainable finance. Thank you very much.